Hi everyone, this is Paul Fauché, Chief Investment Officer at New Road Capital, giving you your November market update. So obviously the big news-making item on the agenda for the month was the US election, with Trump taking quite a convincing victory in that election. And that translated into very good equity returns in the US, which translated well into fund performance for us, as the majority of our offshore equity holdings have been exposed to the US for a while now. We still think globally it's sort of where you're seeing the best opportunity in equity markets at the moment. So if you look at those equity markets, developed market equities up 4.6% for the month. Going into the election, it was fairly flat, but after the election, ran up quite nicely and maintained that throughout the month. If you look at local equities, slightly down for the month. And probably, on the back of that, if you look at emerging market equities, mostly driven by China, down 3.6% for the month. So a very polarizing month for emerging markets versus developed markets. But when you look more deeply into it, it's more US versus China story. So obviously the US gaining quite nicely on the back of the Trump victory. And obviously Trump proposing quite punitive tariffs into China, coupled with some other sort of quite negative economic numbers coming out of China. Demographic issues, they're still not looking very good. So you saw the markets in China sliding off quite a bit, while the markets in the US rallying quite a bit, and we're nicely exposed to that. So we've kind of been underweight China, negative on China for a while now. We don't just think because of the elections. We think that just demographically there's some issues there. They have been trying to launch some stimulus packages and stimulate the economy, but it's not really translating into anything meaningful in the stock market, and the stock market's still selling off quite a bit. So, or from a global macro perspective for the month, the exposure in our funds was correct. Much more exposure to the US, much less exposure to emerging markets, including China. So a good outcome. We think that equity markets will probably continue to rally through the end of the year and early into next year. And we think there's quite a lot of economic positivity around the Trump election. And specifically for the US, we think US equities will continue to do quite well. If you look at inflation, still under control, very much so in the US. Inflation sitting at about 2.6%, so ticking up slightly from its bottom, but still very much under control. Nothing we're worried about at the moment. The big concern, obviously, being that if Trump brings in any tariffs, that might be inflationary for the US economy. We don't think so, and anyone who attended our economic update would have got some more detail around that. But we think that his tariffs could actually be not necessarily that inflationary on the economy, and we actually still foresee the US dropping rates over the course of next year, which would be good for equities as well, and a nice tailwind. Tying that into South African inflation, our inflation now below the low band of our target, so our target being 3 to 6%. Headline inflation coming out at 2.8%. So very good numbers. A lot of that attributed to the petrol price. Oil price still very much under control. So yeah, looking good there. We were the SARB monetary policy did drop rates by another 25 basis points. We think that there's space there for them to drop quicker, and we would hope that they would look at dropping quicker going forward. So we'll see what happens there. But obviously, the SARB quite conservative in terms of the interest rate trajectory, but definitely no inflation pressure on the horizon in South Africa. If you look at the exchange rate, so obviously a strong dollar. You saw the dollar rallying quite heavily after the Trump victory. So the rand weakening to the dollar from about 1760 odd to just over 18 rand. Not actually rand weakness, dollar strength. So the dollar was strong against all the sort of major currencies and the rand. And we think that that'll continue for a while. We think just the positive trade around the US, feeding into US equities, etc., will be positive for a while still. Local bonds performed phenomenally well for the month on the back of that low inflation number, 2.8% for South Africa. So local bonds, also a place where we still like. It's done very well for us over the last year, but still a place where we think there's a lot of value. So local bonds are coming to the party during the month, up about 3% for the month. So the yield curve obviously coming down a little bit, but still looking very attractive, and we still like duration in the bonds. We still like looking at the bonds, and we'll continue to hold them. And then into the developed market bond market. So that's the G7, the biggest 7 economies. also up about just under 0.5% for the month. So overall, a very good month. It's particularly driven by local bonds and US equities. Quite an interesting combination, but very well, both of those are sort of overweight positions across our fund range. So very nice for us. We're very happy with how the month played out. And as I say, we're quite confident into how the rest of the year looks and early into next year. So that's the wrap up for November. If you want any more detail on any of our analysis or things that we've been through throughout the course of the month in terms of our economic updates and things like that, please shout out to the team. We won't be giving an update for the end of December. Obviously, everyone going on Christmas break, but we do wish you all the best, very best over the festive season, and we'll be back with our updates at the end of January. All the best and have a great rest of the year.